Hello, everyone, and welcome to the First Fruit Stock Club podcast. So, I hope everyone is having a great week so far. I don't have a very detailed slideshow this week. I'm just want to get in. Man, my son is celebrating. He will be 10 years old. Let's give another cheer for that. Yeah, I don't know how many of you have kids, but it's amazing. Kids grow up. They grow up so fast, right? Talking to a friend of mine, his son is in his last year of high school. We started a little late, but that's fine. We started when we were ready. But if if you have kids, the problem is, and not a problem, but the thing is that no matter what, time passes, right? My son, God willing, was going to be 10 years old regardless. And investing, you can decide not to invest, decide not to do anything. Time is going to time is going to pass regardless. The market making new highs all the time. The market's going to make new highs regardless if you stay out of it or decide to get into it. It's really up to you. But I am here. And look, um, I have started a free, 100% free um, school community um, about investing. And it's basically based on what I'm going to discuss today. So, today, what I'm going to discuss, and I'll have probably some detailed information in the school club. So, tell your friends. It's on a link above if you're on Facebook or if you're watching on YouTube. But so we're going to discuss big dividends to small options. Big dividends to small options. I To give you a little background, I started out as a financial advisor and came out as a financial advisor during uh, the 2000 stock market crash, and it was tough getting customers at that period of time because, of course, the market crashed and people had lost a lot of money. So I ventured into real estate. Right, I ventured into real estate and became a real estate investor. Owned a nice portfolio, what I could handle, a nice portfolio. But I had a strategy that the real estate taught me, right? Strategy I'm discuss with you guys today and how it relates to the stock market and how it's a way you can make money in the stock market. And basically in real estate, I would make money in three ways, right? Right? It's cash flow, right? You can after you pay your rents, expenses, that net you would be able to keep and save or reinvest it or do whatever you want, but cash flow, right? The next thing was I did rehabs. Rehabs. Didn't hold the property long. I would rehab the property, sell it, right, at a nice gain. 50, 60, 70%, 100%, 200% of my money that I invested, or sometimes a multiple even larger than that. And sometimes I just had properties, just long term holds where I didn't make a lot of money in cash flow, but they had appreciation, right? And what I found out is that this whole strategy relates to uh, the stock market, which is my first love. This whole strategy, right? So today, big dividends, right? So I really, what got me into the stock market is, man, I wanted more income, right? And every, does anybody need more income out there? Does anybody need more income out there? We all need more income, right? And so I was like, man, how can I make more income? And that's what led me to, buying properties. If I could get them at a fair price. And excuse me, I have Invisalign. Sometimes things just anyway. So if I could get a property at a fair price, um, and and I did the rent analysis, like I said, I would receive cash flow. So in the stock market, stocks pay dividends. I know everybody's like, well, dividends are small. It's like $25. No, stocks pay large dividends. There's some stocks that will pay you 100% dividend, right? A little bit more riskier. They're a little riskier, right? But there's some out there um, that have returns, right? They have a what's called a total return, where you add the dividends to the appreciation and you get a total return. Where the dividends, you're not going to get a lot of appreciation, just like those properties that I had. I didn't get a lot of appreciation with those properties, but the net was pretty large. All right. The net was pretty large where I was able to. So you can have property, you can have stocks to increase your income, increase, and they pay monthly. And you can organize them where stocks can pay daily. You have high dividend stocks that will pay you daily, right? So that is the way you can have big dividends. And then you diversify. You decide how much risk you want to take, and it's not super risky because I've been investing in these stocks for a second. Excuse me. So I've been investing in these stocks for a second, and they pay monthly, weekly, but you have to decide, how much you want to put into invest. So once you increase your income, then it's the next step, right? Um, so the next step is like, okay, all right, we increase our income, but we're a little bit longer on the risk, um, a little bit more on the riskier side of investing, maybe in some of the dividends. So we want to take these, we want to reduce our risk, and we reduce our risk, and by having a buying hold portfolio of quality stocks, and what I say quality ETFs, right? That you're not going to get outstanding returns, but over time, right? They grow, right? And they move with the economy, which is like the S&P 500. Okay, they basically track the S&P 500 or the Nasdaq 100, which are the top technology stocks. The S&P 500, which are the 500 largest companies in the United States. All right. And they have to meet certain criteria. So you can take your dividend income and reduce it. Now, you can take your dividend income and spend it. You can do that. You can take some of it, reinvest some of it, put it by the long-term portfolio, or um, or you can spend it, or you can buy more shares in a dividend portfolio. So we're talking about three portfolios that you should have, right? One, two, three. Okay. And then we have our risk portfolio, right? So we have our dividend portfolio where there is some risk, but it's not a high degree of risk. We have our long term portfolio where we don't have a high degree of risk. We're looking long term. We're buying stocks that we feel that they're going to be around for a while, especially ETFs that holds hundreds and hundreds of stocks, that we use diversification risk in the ETFs, and we just pile in those ETFs. And then the third one is our risk portfolio. There are times in the market that where risk is on, right? Where everybody is like, hey, it's time to go. Things are moving forward. We want the economy's doing well. And what happened is just recently, the Federal Reserve Chairman decided to reduce rates. So risk is on, right? And he plans to do cut rates maybe two more times this year. So what happens is when rates are cut, right? People can refinance. Like, so I was just reading an article in the Wall Street Journal, and they were the article was about people. The refi boom is starting again, where people are actually refinancing because the rates have come down tremendously. The rates are almost at like 6.13s last time I look at it. And they were up almost up to 7.5 or even more. So rates come down, people refinance, and guess what? When they refinance, they get more money. And guess what happens to that money? They spend the money back into the economy. And that just boosts everything, right? More demand. People start having to hire again because demand has picked up, because demand has slowed down. That's one of the reasons um, why our president wants the rates to come down, because rates have a tendency to boost economic activity, right? But we still have some we still are concerned about that whole inflation bug, right? So as volume goes up and economic activity starts to move forward, then what happens is people, because businesses aren't able to keep up with that demand, they begin to raise prices again, right? They begin to raise prices again, um, and what they don't want is they don't want another spike in inflation. I mean, inflation still hasn't come down. Still some inflationary issues. It's not all items, but there are some items that that are still have inflation right now. So we want to be sure. So, but right now, because we're in a cutting cycle, more money is going to come into stocks. All right, just my opinion. Okay, my opinion from history. More money is going to come into stocks. More money is going to come available from financing companies and institutions, because you know people will start moving money into more deals, and people want to grow their money faster because the stock market is moving faster. So right now, what's happening is that that because, like I said, because of the rates are being lowered, and we're at the end of the year, this is a great time. Okay, this is a great time to put some money to work. Right, I went berserk on Wednesday. I didn't buy anything today, but I'm going to buy. I'm looking at tomorrow. Tomorrow is triple witching. That's when options contracts expire. So there may be some opportunity there and some opportunity next week. So on the weakness that we may have in the last 2 weeks of September, it'll be a great time for you to put money to work. All right. And if you want to find out what you want to buy and what I am recommending, go to the free club. It's totally free, 100% free, right? And I will put some information in the club, and you will be able to use that. I mean, just it's what I'm investing in right now, right? And if you're looking for some ideas, you may have your own ideas. But it's I mean, I'm always getting ideas, looking at other investors, and maybe looking at some stocks that I haven't thought about, because there's a lot of stocks out there, right? But I'm always looking to add to my portfolio to something that's going to produce returns for me. So there's a lot of other ways. So in this risky portfolio, just to get to that, to this risky portfolio, because now risk is on, right? Risk is on, and the stock market will be moving forward. It'll be a bumpy ride through September, maybe a little bit October, but this would be a great time for you to get some positions in, right? Get some positions that when those down days, when the market is down, just adding to your positions, right? I took some money off the table today, just because of triple witching, and some of the gains I had, but I plan to put money back to work throughout now and the end of the course throughout now and the end of the year. So that's what this three-pronged strategy allows you to do. So I'm sorry, let me back up, digress for a second. In this risk portfolio, what I like is I like options, right? And I've also added leveraged ETFs, right? So they have leveraged ETFs. I know people are like, oh no, don't do the leveraged ETFs. Leveraged ETFs are great for this type of market because guess what? They're leveraged, right? And guess what? What's happening now? Hey, the cost of capital is going down, right? Cost of money is going down because rates have been lowered. So that means that these funds will probably do better from now to the end of the year, probably till until they decide to go any other ways with with the rate cutting cycle. Man, there's a lot of deals being. I'm just talking to some of my friends who are out buying things and like, you know, this is the time, right? If you feel like, ah, man, I missed out last time, and you didn't, this is one of those times, right? Where I think risk is on. I mean, we're going to still keep some cash available, right? We keep cash available because we are always prepared for opportunities. But man, if you've been saving, when you put in some money, this is the time where you want to put some money to work. So look, free club, free school club. Like I said, it's in the link on if you're watching on YouTube, you can go into the link on YouTube and it'll have the club or the link on Facebook, right? And this in the description in this video. You'll see the link. 100% free. You just go into there and you click join and you just come in there 100% free. And what I will be doing is this weekend or probably tomorrow, I will be putting in picks, right? Because tomorrow, I think tomorrow is going to be one of those days, one of those choppy days. But I think next between tomorrow and next week, and I might put in a few things tonight. That's what I'll do. I'll put in some things tonight, and I'll put in some of the option plays that I'm in right now that I'm holding. I did cut some of them. It's good to like, and this is in that risky portfolio, right? And what I say to you, I didn't do my disclaimer. Right, investing involves risk, right? Investing involves risk. All investing involves risk. All right. Stocks aren't 100%. Nothing is. All right. And if you want advice, go to a financial advisor or a seasoned financial professional. And let me just. So the information provided in the First Root Stock Club podcast is for educational, informational purposes only. And should not be considered financial investment, legal, tax advice. The views expressed by the hosts and guests are their own, reflect opinions of any financial institution or regulatory authority. Investing in stocks and securities carry risk, including the potential of loss of principal. Past performance is not indicative of future results. Always conduct your own research. All right. First Roots Club and its affiliates do not guarantee any specific outcomes or returns. All right. So I had to go back and say that, okay, because there is risk in investing. And what I'm doing is in the club, I'm just putting in what I am investing in. You can decide to follow me or decide to do what you want to do on your own. Um, but like I said, it's 100% free. You can follow me on what I'm doing. But I believe this is a great time to really start putting some money to work in the market and just as you're investing, just keep some cash available, right? So if you have $1,000, maybe you only start out with a couple $100 and build it out. But I think that if you invest from now, at the beginning of next year and the next end of this year, you'll be happy, right? Because risk is on, rates are lowered, the cost of debt is lowered, right? So and people use debt to invest. I don't. I mean, when you invest in options, it's definitely a leverage position, but I don't really use debt to invest. Right? That's definitely not saying I won't ever do it. 'Cause some opportunities will be too good, but if you're starting out, that's something I do not recommend. Right? If you're starting out, I do not recommend probably the triple leverage. If you're scared, If you can't afford to lose your money, right? I don't recommend investing in the stock market, right? But if you have extra money sitting aside that you want to put to work, one of those times. This is one of those times, and you can start with small amounts, right? Um, and from those small amounts, you can build up over time, and that's what I kind of do with my option contracts. I start out. You can buy option con. I have a lot of my contracts are like $100 for one contract, right? And option contracts with options, you basically own 100 shares of the particular stock, but it's a contract, right? And usually call long-term call options with a lot of my expirations are in March, right? So, and what happens is when the options expire, meaning your option will expire worthless, but 90% of the people, let me say 90%, a large percent of people never hold options to expiration. If the options is doing bad, usually people just sell it and get what they can out of it. Or it's doing so well, if it goes up 100%, maybe you cut 90% of it, right? And you keep one contract and you hold it. And when the price come down again, then you just add to that contract again, right? Or you can start a new contract. But what happens is when you have dividends and you have dividends coming in every month, guess what you can do every month, right? You can buy new option contracts. You can add to your buy and hold portfolio, right? It's something you can do every month and creates a great opportunity for you and for your family. Just like I was saying, as my kid is 10 years old, God willing, I'm glad he reached the age of 10, but as time goes on, time doesn't stop for anyone. So you can just put things off and say, I'm going to invest next time. And you can just come into the club and get information. You can ask questions. I will respond to you. Um, and, you know, and you can move forward from there. But the stock market won't wait for you till you decide you want to get yourself together. Till you decide you want to try and decide whether you want to buy something, a consumable, which most Americans, we consume everything, and we don't have any money left over. And in saying that, the most important step is the step of first fruits. All right. What I'll try to tell everyone is the first fruits, the first dollars, tomorrow's payday. All right. And most people, for their paycheck, right? Not you though, not you, not you out there who's listening to this, but most people, their paycheck is already allotted for. Right? Their paycheck is already spent, and even spent beyond that. But not you. You're smart, right? You said, look, I'm going to give 10% of my paycheck away. And I know that's it's crazy and it's hard for to say, and people don't understand that. But if you want favor in your finances and in your household, right? And relieving yourself of consumerism, giving that first 10% away does something to your soul, and it starts to attract to you opportunities. Just something to think about. So tomorrow, what we're doing is we're giving. If we don't have a brokerage account, we're opening up a brokerage account, right? And we're going to open up 3 accounts and we're going to fund that account. We're giving and funding our brokerage account first, right? Paying our bills, whatever you have outstanding. And if you have something left over, um, then you spend that on yourself. All right. That's the formula. And it's tough when if you started the other way, that's the formula that you want to get to. The formula that I preach, the formula that works. Right. All right, man. It's been great. It's been great for you guys. Hey, I hope you guys have an outstanding rest of the week and weekend. I'm going to celebrate my son's birthday, 10, 10 years old on this earth birthday. Wow, man, I'm I still have a ways to go. talking to some of my friends who have kids that are like in college right now. It's amazing. And they started a lot earlier than them, but I'm okay with that, you know. And man, I'm enjoying my kids every step of the way. School, I'm about to go over my son's test tonight so he can do well on his algebra test tomorrow. So anyway, hey man, you guys, everyone be safe and fruitful. Until next time. See you then.